Welcome to the Daily Coffee Pro by Map It Forward, friends. Today on the podcast, we're going to be talking about your profit and loss statement. So this is something that we're talking a lot about in the mastermind groups at the moment. Understanding the financial health of your business is incredibly important at any time, but particularly in 2020 as we're experiencing so much shifting from many different levels of the world, whether it be political, health, economic, etc., etc. So understanding your profit and loss statement is incredibly important. And here's why. Your profit and loss statement is going to give you an insight into where right now and across the period of a certain space of time, whether it be in this current year or in this current quarter, how much profit you're actually making based on all the money that's coming in and going out of your business. Most business owners that I speak to haven't got the insight into understanding their profit and loss statement. And when I go through the process of helping them understand their profit and loss statement, it changes the way that they look at their business and how they move within their business. And given that this was something that was so important and so focused on in the mastermind groups and in the one-on-one coaching that I do with businesses around the world, I thought there must be a lot more people out there that need to understand how to read a profit and loss statement. And if you want to go into this further and how it relates directly to your coffee business, consider joining one of the mastermind groups, going to mapitforward.org/group coaching and check out our options there, or contact us for one-on-one coaching. So before I go into this, I want you to remember, I am not an accountant. I am not a bookkeeper. I do the books for my companies, but I am not an accountant. And that's important to understand because I'm not giving you any financial advice. I'm not giving you any accounting advice. I'm simply helping you understand how to read a profit and loss statement. So, where do we start? The first thing we want to do is we want to understand, as I said, that what is the point of a profit and loss statement? Your profit and loss statement is going to tell you based on the period of time that you were looking at. So you'll go into either using QuickBooks or whatever system you're using, set the time period, whether it be by quarter or annually, to understand in that period how much money you made or lost in your business. Your profit and loss statement is broken into into 4 sections, essentially. The first section is how much money came into the business. That's your revenue. So you've got your gross revenue, all the different places in your business, all the different revenue streams that you earn money. That includes through sales, it includes through interest on money that you've got in the bank, it includes on any consulting, anything, any kind of place that you've earned money goes into the revenue section. The next section is what we call your COGS, your cost of goods sold. So your COGS, here is the section that tells you how much money did I spend on producing the product that I sold. Section 1 is the money that came in. Section 2 is the COGS. The money went out to produce the costs or to produce the products that you sold. Section 3 is your operating expenses. And this is broken down into 2 subsections: your fixed operating costs and your variable operating costs. Now, your fixed operating costs are the expenses that you will spend no matter whether you sell one product or none. For example, your rent. You will have to pay rent whether you sell a product or you don't sell a product. You will have to pay your insurance whether you sell product or don't sell product. You will have to pay your accountant whether you sell product or don't sell product. Those are the kinds of fixed operating costs that we're talking about. Now, one caveat there. When we say fixed costs, we don't mean the amount. So your insurance may vary month to month. Your your other expenses that go into your fixed cost category may vary, like your telephone bill may vary in the amount that you pay, but the actual expense that you incur, the telephone bill, is fixed. You will always incur a telephone bill every month. You will always incur a rent bill every month. The second part of your operating costs are your variable operating costs. Now, your variable operating costs are still things that you'll pay for whether you sell one product or not, but you have the choice whether you spend money on it or not. For example, advertising. If you spend money on advertising, you'll still have to pay the bill whether you sell any product as a result of your advertising or your marketing efforts or not. So it doesn't go into the COGS category. It goes into your operating costs category, but there are some months where you'll incur that cost and some months where you will not incur that cost. And for that reason, it goes into your variable operating costs section of your profit and loss statement. So to recap, section 1 is the revenue section, gross revenue. Section 2 is your COGS, your cost of goods sold section. Section 3 is your operating costs, and section 4 is your net profit. Your net profit is going to tell you that when you take into account your section 1, how much money came in, and section 2 and 3, how much money went out of the business, that's going to tell you what money you've got left over as a net profit. Now, you may have heard of the term, what's my gross profit? This term, gross profit or gross margin, is what happens when you take away section 1, your revenue, less section 2, your cost of goods. So how much money came in and how much money did I spend to produce the product that was sold? The difference between those two is what we call our gross profit or our gross margin. That tells us how much money we've got left to spend on running the business or to cover our operating costs. That's the general breakdown of a profit and loss statement. And that net profit number, that's the amount of money that you've made. The reason I say it like that is because you get a lot of people that say, but my profit on a latte is $3 for a latte that I've sold for $5. That, my friends, is your gross margin. So from the $3 that's left, you've still got to operate, which it's not, just for sake, it's not $3 profit. It is the money that's left over that you have to spend on running your business. And it is an incredibly important thing to take into account because most people throw it out there and say, my margin is $3. Understanding that that's your gross margin and not taking into account your operating costs is incredibly important to understand. Your net profit is going to be more like something along the lines of 10 to 20 cents per latte. That is your net profit. And there we have it, friends. That's how you break down a profit and loss statement. So if we can be of any help, please join our mastermind groups or hit us up for one-on-one coaching and we can help you take a look at how this extrapolates further into building business plans and projected sales plans for your business, as well as coming up with a whole bunch of other great stuff that I've helped do for many, many businesses across the world, especially in the coffee space. Peace, love, and peanut butter, friends. I hope this has been helpful. Have an amazing rest of your day.